Yo, what's up, everybody? How y'all doing? Welcome back. It's your boy Devin B. Back again with some ICC. All right, so this morning, 9:30 a.m. Central, I'm looking at gold. Now, y'all already know I normally look at gold at night, but all right, so I normally look at gold and silver at night and metals, S&P, ES, and NQ in the morning. Man, look at ES. Look at this. Chop, chop, chop. See all that? Like, what I'm supposed to do with this? Other than wait for it to break out of this big old range of consolidation. All right. So really, S&P, nothing really going on. Nothing I can really do with this right now other than wait. All right. Might be waiting a while too. All right. Look at NQ. NQ. Now, NQ got a slight uptrend to it, but not something what there's nothing to really follow other than like this little high right here. We might be able to call this indication, but look what's happening. It came down, the liquidity is like down here, like it's just playing around. All right. Now it is on a slight uptrend, so might be able to keep an eye on NQ, but for the most part, the magic has been with gold. All right. So I'm looking at gold. Now, although I do see the EMA kind of flat on gold, the 50 EMA. Oh, yeah, that's the 50 EMA. Somebody asked me what EMA settings I use on one of my videos, a comment. I use the 50 EMA. All right. And it's just for like extra confluence. That's all I use it for. Nothing more, nothing less. All right, just extra confluence. But let's take a look because I really think gold is going to go up. Okay, so on the 1 hour, you already know you look and see what direction the market is moving in. And you can see we had been bullish. All right, we had a little downtrend here for a couple days, but now we're starting to break these highs again. Another thing, and this is something that's not really taught by side. But another thing that I noticed, we had a liquidity sweep right here into this fair value gap right here. See this fair value gap? And if you know anything about liquidity sweeps, 9 times out of 10, when liquidity gets swept, price is going to go in the opposite direction. All right. So I'm definitely aiming for my target will be this high right here. Because if price is going to continue going up, it got to clear that high, right? So, but how high is it going to go after that? Who knows? All right. But definitely this will be my target right here. I'm looking for a buy. Now, the ICC portion of it shows me indication right here. See this? I marked this right here. I marked this high. Boom. All right. And I marked this low. Boom. And look at what happened. All right. Oh, this is on the 1 hour. And then look at another thing too. This little down move right here. Look, fair value gap inside demand zone. Just like this right here, fair value gap. Tapped it, went up. Look right here. Tap it, went up. All right. You got to know how to use the clues. All right. Like my partner Drake said, you got to use your tools in your toolbox. All right. Don't just let them sit there and get rusty. Use all your tools in your toolbox. Now, before I continue this video, I would like you guys to go ahead on, hit that like button, hit that subscribe button, and share this with about 100 of your friends. All right. I want each of y'all to share it with 100 of your friends. All right. So check this out. The ICC portion. All right. So we got indication, right? See, this is the high, got broken. Price came back down. Let's go to the 15-minute time frame. All right. And look at what we got. Boom. Indication, correction, and now we're getting continuation. All right. Let me see. 30-minute. Look at this. See, we got fair value gap in between here, a small one here. Price came back down. We got a little order block right here. Now, when you're in correction, if you see in any of my other videos, about this strategy. When you in correction, you want correction to come down to an area of internal liquidity. And when I say internal liquidity, that's an area of liquidity somewhere internal, meaning inside of this range, the range being from this low to this high. All right. Between this low into this high. Now, excuse me, y'all. I got a trick for y'all. I showed this in another video as well. My Black Diamond All-Star Fibonacci settings. Watch this. See this fair value? See this right? This order block right here? Watch something. Now I didn't even look at this previously. Y'all catching this live, y'all catching it raw with me. Check this out. I want you to keep your eyes on the 0.62 and the 0.79. You're going to notice it's going to be two goal lines. The 7.9 is a goal line, 6.2 is a goal line. Watch where it falls. Now, once again, I never put this on. We live right now. This is just happening. So watch this. Check this out. Look at that. Boom. Look where it falls at. That's called your optimal trade entry. Between the 6.2 and the 7.9. Look where it came at. Right up in there. Come on, dog. Come on, dog. Tell me this ain't powerful. Tell me this ain't powerful. All right? But that's what I do. I want price to come down to internal liquidity. I'm not catching this trade when it comes way back up here. That's leaving way too much money on the table. If you trade that way, cool. That's if you trade that way and it works for you, awesome, amazing. I'm happy for you because at the end of the day, we all want to be profitable, but at the same time, you're leaving a lot of money on the table, man. And then if you're getting in a trade up here, where are you putting your stop loss? You're putting your stop loss down here, way down here. All right. You putting your stop loss way down here. You get in the trade here, your stop is here, and your target is there. You got a negative risk to reward. Negative. That means you can't lose no trades. Look, my target over here, I get in here, I could target this and still make a good profit. And my stop loss will be down here, or maybe not. Maybe I can put it a little bit closer. I can put it underneath this zone right here, like a few pips underneath this order block right here. Now the safest spot is way down here. All right, but I can put it here because I know it's not coming back. If this comes back and break this, if it comes back and break all this, I'm gonna wait and see. And if it breaks this right here, then it's probably gonna go lower. All right. But this was my liquidity. This was where the last of my liquidity was located at. There's no reason for price to come all the way back down here. No reason. Look, we got order block and we got fair value. Go back to the 1 hour. Look at the 1 hour. Look at that little fair value gap here. Boom. In there. Between these two wicks. Between this top wick and this bottom wick. Fair value gap. This is a balanced market right here. See how these wicks overlap? This wick and this wick. See how they overlap? That's a balanced market right there. So there's nothing for it to come back down to. That's why it came and filled and it took off. All right? Use those tools, man. Use your knowledge. Use everything you learn. All right? Use everything you learn in combination with ICC. All right. And once again, I don't get in when price close above this high, above indication. I get in at liquidity. Once I go down. All right. So let's look at entry. Because I know y'all wondering, well, how do you enter this trade? Okay, cool. Check this out. Somebody asked me about that as well. I like to go down to the lower time frames, mainly the 5 minute. All right. Now here on the 5 minute, I don't really see nothing. As far as the structure that I use, the 3 minute, let's go to the one, because you can get in on the 1 minute. Yeah, the 1 minute. Okay, so check this out. Where was my low? My lowest low that tapped inside my liquidity. It was right here. All right. This was my low. It tapped in, it came up. It came back down. Now look what happened. The first sign that this is what's going to continue up was that this low did not break this low here. All right. So this is essentially our shift in our market structure. All right. And then look at what happened. Next thing what happened? We broke this high right here. See this high right here? It got broken. Broken. And when I say broken, price closed above it. All right. So now, boom, our up move has been confirmed from liquidity. Now, where do we enter? You could enter on the close, but look at this. Watch this. Let me show you something. What I like to do, the same way I find indication, correction, continuation, is the same way you can get in that trade. Indication, make your correction down. See that little move back down into here? And look, a little fair value gap right there. You can get in right there. Continuation. And look, never came back. Never came back. And that's on a lower time frame. The same thing you look for on the higher time frame. Look, your indication up, correction down to liquidity, enter where you enter at, and then continuation. Go down to that lower time frame. Same thing. Indication. Now this correction here is it didn't go real deep, but it still tapped in there and then it took off. Now you could have entered that way. There's also what's called a CISD. All right, that's called a change in the state of delivery. And what that is, you could have got in this see these candles right here. Once price closed above these consecutive candles, you could have got in. So that would be it closed above on this black candle right here. This black candle. Because we got these three. Well, use the wick. It's better to use the wick. So you would have got in up here. But still, it's a whole lot better than getting in up here. All right. And even there, you're not far away from where my entry would be at. You know, if you do that lower time frame ICC entry. All right. And that's it, man. That's it. It's simple, you guys. It's very, very simple. What I suggest is that you come on TradingView and you get a paper account. You go down to the see right here where I says paper trading. This is my paper trading account right here. All right. Well, one of them anyway. Let's see. Black Diamond, delete, Devon B. This is my other one. I'm 13,000 up. This is my 50K. I'm $13,000 up on this one. This was a contest one, and this is my new one right here. All right. But you come in here and you practice, man. You practice. Don't be embarrassed to trade, the paper trade. All right. People might diss you on social media. Forget all that. You're paper trading so you can sharpen your skills. You're paper trading so you can get better at your strategy. And this ICC is awesome. This ICC is awesome. That man get a lot of hate for no reason whatsoever, because it's awesome. And although this ain't nothing but market structure and liquidity, a lot of market structure that been around for decades, guess what? He put a brand new perspective on it. He simplified it. He let you see it from a different viewpoint, and he made it simpler. He made it simpler. He made it more understandable to where anybody can get in and learn this. All right. My kids in elementary school can learn this. Matter of fact, they are. I sit them down with their tablets. I connect my computer to my TV and we get in grind mode. Because I'm trying to teach my kids how to not have to rely on somebody to give them a check, somebody to give them any kind of assistance, you know, to be the lender and not the borrower. All right. The borrower is slave to the lender always. All right. So y'all got me preaching on here. But man, I'm telling y'all, man, y'all learn this, practice it. Once again, I'm gonna run through it one more time before I log off. Don't forget, y'all, man, please subscribe, smash that like button, smash that thumbs up, share it with 100 of your friends. If you got 100, share it on your social medias, TikTok, Instagram, Facebook, all your trader friends. Let them know Black Diamond Effects got the sauce. I got the sauce. I didn't create ICC. All right. I didn't coin the term ICC, but guess what? I've been trading ICC for a very long time now. I didn't even know it was called ICC. I called it the Black Diamond Cutter. And y'all can go back and see I got a video called the Black Diamond Cutter. That's what I called it. I didn't know anybody else that was trading like this until somebody on TikTok told me. I'm like, all right, cool. I'll check his videos out. And he simplified it more than I was simplifying it. I'm like, all right, cool, cool. I can rock with this. You know, that goes to, man, it's no hate in my heart. It's all about making money. If it make money, I'm with it. Legally, man, come on, bro. We not in competition with each other. Regardless as to what social media may tell you, we are not in competition with each other. It's us against the market makers, right? Why are we fighting each other? Why are we debating whether somebody made however much money? Be happy for them, man. Know how to congratulate people. Know how to celebrate. Because guess what? Your time coming, and they're gonna celebrate you. Why? You know what I'm saying? Like, come on, y'all. We gotta do better than that. All right. But yeah, I'm sorry for that. Let's get back to it. Last, I'm gonna run it down one more time. This is gold. This is gold. Gold micros, MGC. All right. And I found this entry. Once again, I look at my higher time frame. I see gold had been bullish, made a pullback right here, tapped into internal liquidity inside of this range right here. All right. Got a liquidity swept these lows inside of this internal liquidity. That's what I like. Came up, came down. And look, another one right here. Boom, internal liquidity, fair value gap. Went up, broke this high. Come on now. Gave us indication, came back down to some more internal liquidity. Notice the words I keep on using. Liquidity, 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 internal. There's internal and there's external. I'm going to teach y'all the difference. Not today, but I will in the future. All right. That's why you need to subscribe. But notice the words I continue to use. Liquidity, market structure. Those are the key to this. All right. And look, down to the 15-minute, same thing. Boom. Y'all saw when I throw that fib on there. Let me put that fib on that because I know y'all want my settings. Check this out. Look at the settings right here. 0, 0.5. Write it down, write it down. 0.62, 0.79. The 62 and 79, I have those gold. You can make it whatever color you want. You don't have to be gold. And 1. All right. Those are my settings. Let me pull them up right quick. I'm going to pull them up right here. Now, I do have more settings than that on my fibs because I use my fibs to find targets sometimes as well. But I haven't been using them lately. The -1, -2, -2.5, and -4. All right. I use those to find targets as well. But the important ones are 0, 0.5, 0.62, 0.79, and the 1. All right. Pause it and write it down. You can screenshot it, take a picture of it, whatever you have to do. Right. So we got indication, correction, continuation. Boom. All right. Y'all got any more questions? Holla at your boy. I do have a free Discord. All right. I do have a free Discord. If you're interested, comment below. I'll give you the link. Or send me my email address. Or look me up on TikTok at Devin B on TikTok. Send me a message. TikTok. Hold on. TikTok at Devin B. All right. Or Instagram at Black Diamond _FX. Make it big for y'all. There y'all go. All right. Give me a follow. Holla at your boy. Y'all could send me a DM. Now I do have a free Discord, but I also do one-on-one training, but the one-on-one training is paid. You have to pay. I'm sorry, it's $250. You get 3 sessions. Each session lasts between an hour and an hour and a half. It's extensive. We cover, depending on, once you pay, right? I'm gonna do an interview with you. to determine where are you in your trading journey. And your one-on-ones will be based on that. All right. Your one-on-ones will be based on that. So the first is 250 and you get three. Your first three. We go extensive. We go into great detail. All right. After those three, each session is $100 an hour. All right. So yeah. But I thank y'all for watching. Thank y'all for the likes, the comments. Man, y'all been showing me so much love over the past few days. It's unbelievable. It's unbelievable. I appreciate it. I'm trying to build my community so I can do some giveaways with you guys, like account giveaways, prop firms. So that's why I need y'all to keep on subscribing, liking, following me on my social media pages, because the more I'm going to be bringing affiliate links in, so you guys can sign up for affiliate links and I can get paid. And they also will start giving me, like, the more um followers I have, the bigger my community is. That's what they want. That's what those companies want. And they give away these free accounts to give away, these giveaway accounts. So I can do giveaways on YouTube. I can do them on Discord. I can do them wherever. All right. But I thank y'all for watching. Please hit that thumbs up, subscribe, and I'm gonna holler at y'all later. All right. Deuces.